slide highlights the importance of SMEs in shaping Malaysia's economy. Our economy depends heavily on agriculture. But today, SMEs have helped transition the country towards a manufacturing and services-based economy. SMEs play a vital role in generating employment opportunities, especially in rural and low-income areas, which helps in poverty reduction. At the same time, SMEs are engines of innovation, often driving new ideas, products and technologies at the grassroots level. Their impact extends beyond just business as they contribute significantly to national growth and help us meet broader socio-economic goals. In today's knowledge-based economy, SMEs continue to be a pillar of resilience and competitiveness in Malaysia.
Now, let's take a look at the size-based classification of SMEs in Malaysia. SMEs are categorized by the number of employees and their annual sales turnover. First, we have micro-enterprises. These businesses have an annual sales turnover of less than 300,000 ringgit and employ fewer than 5 workers, regardless of whether they operate in manufacturing, services, or other sectors. Next are the small enterprises. For the manufacturing sector, small enterprises generate between 300,000 ringgit and 15 million ringgit in annual sales and have 5 to 75 employees. For services and other sectors, they record between 300,000 ringgit to 3 million ringgit in sales with 5 to 30 employees. Lastly, we have medium enterprises. Manufacturing businesses in this category report sales between 15 million ringgit and 50 million ringgit and employ 75 to 200 people, while in services and other sectors, they earn between 3 million ringgit and 20 million ringgit annually, with 30 to 75 employees. This classification helps the government tailor support and policies that match the scale and needs of each business group.
Many SME operate with limited assets and often don't have enough valuable property and equipment to offer as a collateral. Since banks usually require tangible collateral to protect themselves from lending risks, this becomes a major barrier for SMEs seeking loans. When businesses can meet this collateral requirement, banks may reject their application entirely or offer only minimal financings. As a result, SMEs struggle to access the credit they need to operate, grow, or even survive. In short, insufficient collateral makes SME appear too risky in the eyes of lenders, and that seriously limits their access to vital funding.
Next, limited access to finance means that people or businesses cannot easily get the financial services they need, such as things like loans, credit, service accounts, insurance, or investment opportunities. This will limit their ability to grow, hire workers, or innovate the businesses. As is the most critical issues for SMEs to obtain sufficient funding, banks and traditional lenders often view SMEs as high risk due to their limited operating history and lack of substantial collateral. This will lead to business being disqualified from securing loans and resulting in difficulty of securing loans and other forms of credit. And for the effect, there is increase of the lenders, which causes the supply of credit and credit rationing decreases. There is an increase in the number of lenders as there are a lot of people trying to apply for loans, either for business or personal needs. Thus, there will be a lot of people entering the market for financial institutions and leads to competition among them increases. And what's more, every lender will try to offer their credit to borrowers competing on interest rates, or maybe terms, or maybe loan accessibility, which will increase total supply of credit. And for secondly, we have informal business structures occur because of SMEs operate informally or not properly registered. Informal business structure could be referred as unregistered business that are not recognized by government or tax authorities and operates without formal licenses, permit, or standard legal frameworks. There is some SMEs that operate informally because it involves a lot of cost and complexity of registration, as it can be expensive and bureaucratic. And lastly, we have SMEs often have limited or no history of borrowing from banks, as they are often seen as a high-risk borrowers due to volatile income or lack of assets, and thus banks may deny them credit or avoid working with them.
Many SME in Malaysia face difficult in getting information about financing. They don't know about loan, grants or government program because bank and agency don't always reach out to them properly. Most of the information is shared online or in big cities, so small business outside this area get left behind. Also, many SME owners don't have access to financial advisor who can help them apply for loans or understand the requirement. Without proper guidance, they may feel confused or discouraged. As a result, SME often overlook useful financial programs that could help them. Some submit incomplete or poor quality application who leads to rejection. Others return to informal lenders who may charge very high interest rate and expose them to financial risk. In the long term, this program affect their ability to grow and succeed in a formal or sustainable way.
One of the key government initiatives designed to support SME in accessing bank credit is through capacity building and financial literacy programs. This program offers targeted training in essential areas such as financial management, business planning, and credit evaluation. The goal is to equip SME owners and managers with the skills they need to make informed financial decisions. By gaining a better understanding of how to manage their finances, interpret key financial documents, and plan effectively for the future, SME can develop stronger, more structured loan proposals that meet the expectations of banks and financial institutions. Improved financial literacy also allows SME to monitor their cash flow more accurately, avoid common financial pitfalls, and increase their creditworthiness. In the long run, this not only boosts their chances of getting loan approval, but also contributes to the overall sustainability and growth of their business.
For this solution, we have government-backed loans programs such as BNM, that stand for Bank Negara Malaysia, the National Financing SME Bank, and many more. First, we have provide incentive for banks that serve high-risk or undeserved groups. It is a critical policy level to promote financial inclusion, stimulate local economies, and reduce inequality. These groups often include low-income individuals, rural populations, minorities, small businesses, and people with no credit histories. Banks may be reluctant to serve them due to perceived risk, low profitability, or lack of infrastructure. Next, combine loans with training or incubation programs, which is a strategic approach to increase the success rate of borrowers, especially those from high-risk or undeserved communities. This will help reduce business failure and loan default rates, and enhance banks' image as socially responsible institutions. Other than that, we have developed transparent tracking systems and dashboards to monitor loan approvals, disbursement, and impact. It is essential for the business to improve their accountability, build trust among stakeholders, and ensure that credit programs for those targeting undeserved or high-risk groups are effective and inclusive. Lastly, we have provided loan restructuring options. It is a strategy for supporting borrowers who face financial stress due to external shocks, personal hardship, or market volatility. With this strategy, the borrowers will have a chance to recover without defaulting, and thus helping lenders protect the long-term value of their loan portfolio. For example, we have payment holidays, which is a temporary suspension of loan repayment for a defined period that could help in prevent short-term delinquency that occur when borrower fails to pay a loan installment on time and turning into defaults or interest deferrals, where borrower who can manage principal but struggle with interest costs temporarily, or refinancing that give borrowers a fresh start with sustainable terms, but that may incur additional fees or require collateral reassessment.
The third government solution is the promotion of digital credit assessment platform to help SMEs secure bank credit. These platforms are mainly powered by fintech, and they use alternative data sources to assess the credit worthiness of small business. These include data like sales performance, utility bill payment history, and transaction records, not just formal financial statement. This is important because many SME in Malaysia, especially micro and informal business, are unable to meet the strict requirement of banks. They may not have complete documentation or strong credit history. With digital platform, these SME are given a fairer chance. The credit evaluation process becomes faster and more inclusive. It also reduces the burden of manual paperwork. For example, if a business has been consistently selling through platforms like Shopee or Lazada and making regular payment to supplier, that information can be used to prove its reliability and repayment ability even if it doesn't have a proper business loan history. The government supports this initiative by encouraging collaboration between banks and fintech firms and by providing incentives and grants through agencies like MDEC under the Malaysia Digital Economy Blueprint. Overall, this solution not only helps SME to get financing more easily, but also push our financial system to become more modern and inclusive.
Let's wrap up with a brief conclusion on the role and challenges of SMEs in Malaysia. First, it's important to recognize that SMEs are a key pillar of Malaysia's economy. They significantly contribute to GDP, employment, innovation, and entrepreneurship. However, many SMEs continue to face serious obstacles when it comes to securing bank financing. The most common issues include a lack of collateral, limited access to finance, and limited information and support services. To address these challenges, a coordinated approach is needed. This includes government intervention, support from financial institutions, and assistance from advisory bodies. In short, with the right support system, SMEs have the potential not only to strive but also thrive, becoming more competitive and resilient, while continuing to play a vital role in Malaysia's long-term economic growth.